All right. Good morning, everybody, and welcome to our weekly mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, you guys are having a good Thursday. If you can hear me out there, let's see some VV Nation showing up in the chat there. We should be live both on YouTube and on Facebook now, so everything should be working properly for us here this morning. So no disruptions with that, which means we can jump right into it here today. Let's see, waiting to see some VV. There we go. There's some VV Nation showing up in the chat. Awesome. So hopefully you guys are having a good Thursday once again. I see, we can all see right now that the major indices are deeply in the red here this morning. Looks like, yesterday's rise that we saw after the high inflation data was just a little hiccup before this downturn continued to pick up some steam to the downside. So definitely something we need to be cautious with currently in the market right now. Reginald and Cyborium, good morning. Hopefully you guys are all doing well. Welcome to this week's mobile coaching session. Today, we're going to be taking a look at the WOW watch list. It's something that the majority of people may not be familiar with, but it's an extremely powerful tool inside of the VectorVest Stock Advisory app. It's definitely an undervalued watch list here that we have built for stocks that are talked about in all the major publications out there. So this is a great way to help, once again, save yourself time, which is what VectorVest is really designed to do. Because instead of you having to go out and subscribe to all these different newsletters and reading through them to try to find what stocks are recommending and what stocks they think are hot and what's not, VectorVest takes all that out there, puts it into one place, one easy to find place. So that way you can spend less time having to search for those candidates and more time being able to enjoy things you'd probably rather be doing than managing your portfolio 24/7. All right, so I see we're good on YouTube. Should be good on Facebook. Hey, if you guys are on our Facebook page, hit that thumbs up button. Also, let us know where you're tuning in from here today. Same goes for you guys on YouTube. If you're brand new to the channel, if you're just now getting in, make sure, as always, smash that like button, subscribe to the channel if you're not already subscribed. All of that helps us out with the YouTube algorithms and doesn't cost you a thing, and it helps show your support and helps continue to grow this awesome community that we built here. All right, so with that, if you're new, just to give you a little insight, what we typically do here is we talk about what's going on in the market right now, then we dive into our topic of discussion, and then as always, we'll finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So therefore, if you guys want to see your own stocks analyzed, make sure, as always, stick around towards the very end and we'll analyze those stocks for you. ABQ tuning in from Albuquerque. Charles tuning in from Tucson, Arizona. Reginald tuning in from Sun City, Texas. Glad to see all you guys here this morning. Joey tuning in from Huntersville. Glad to see we got somebody close to us here. Hey, Joey. Hopefully you're doing well. Hopefully you had a good birthday yesterday. All right, so with that, let's jump right into the app here today, start to take a look at what's going on. So right now we can see the Dow is down about 1.9%, the NASDAQ is down 1.75%, S&P 500 down 1.8%, VectorVest Composite down about 1.9% so far. So therefore, that puts us 2 ticks into the red, therefore the color guard is somewhat bearish, and VectorVest does not advocate buying any stocks at this time. I think we can all agree that's pretty sound guidance so far. If we scroll down a little bit, as always, if you ever want to see, if you're already a subscriber, and if you ever want to see, a recap of what's going on, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day, make sure to watch that daily market update where we recap all of that for you in about 10 to 15 minutes a night for you. Alberto's tuned in from Miami. Good morning. Hopefully you're doing well, Alberto. Glad to have you here today. Seeing a bunch of people now commenting in. Wendell tuning in from Battle Creek. Hopefully you're doing well, Wendell. Can you list any examples of strategies utilizing the WOW watch list? So Nick, there's been a lot of strategies that we've done over the years utilizing the WOW watch list. Those are all archived in the VectorVest University, where you can find all of our weekly strategy videos that we do. The WOW watch list has been around ever since 2003. So yes, we have a lot of different strategies showing you multiple different ways of how to utilize that. Unfortunately, I can't list all of them right now, but as always, if you ever want to see that list or if you want help finding that list, simply give our support a call. They'd be glad to walk you through it and helping you get to exactly those videos that you're looking for. So unfortunately, I can't do it live here because that would take up a little bit too much time for what we're trying to do here today. You can give our support a call and they can help you find all those strategies for you. So hopefully that helps you out with that one. All right. So scrolling down a little bit, taking a look at the color guard, as always, the top row of lights in our color guard is where that gauge that we just looked at gets its colors from. So as we can see, we have 2 red lights showing up in the color guard, and we see a yellow light showing up in the price. Now, if you're new to VectorVest, you may be wondering, why do we see that yellow light? You know, the markets are down. Why don't we have 3 red lights across the board? Well, if we count back 5 trading days earlier, we see that the July 7th price was green, and we can't go from green to red over a 5-day basis. So even though we're lower day over day and week over week, the best we're going to see in the price column is a yellow light. Now, next one we look at is RT, or relative timing. The relative timing is looking at that short-term price trend in the overall market, and it's cast on a scale of 0 to 2. So since it's below 1, that tells us the short-term trend in the market is down. Also, it is lower day over day and week over week. And same with the buy to sell ratio. But the buy to sell ratio is looking at the overall health of the market, looking at the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. So as we can see, since it's below 1 and lower day over day and week over week, we do have that red light there, and it shows us overall weakness in the market. 9% today because of y'all. Hey, LB, glad to hear it. Like seeing that. I always love hearing the feedback from our customers when they're making money. That's definitely, a positive thing there. Drew showing up in the chat. VV Nation, glad to have you here again today, Drew. I think the tech stocks are going to have a bad earnings, but what do you think about Apple, Amazon, Meta, Google after earnings? So Bill, we talked about it a little bit yesterday during our afternoon market action with Glenn Tompkins and myself. Personally, I like Meta. It's an undervalued stock currently. It's been beaten up pretty bad. Realistically, there's a lot in the tech side of the market that has a lot of potential. LABU being one of them, a triple leverage ETF on biotech. Biotech as a whole seems, to be consolidating, looking for a run here soon. But yeah, there's definitely some really interesting plays I like out of the NASDAQ or the tech heavy aspect of the market. Cody's tuned in saying scalping GOEV up 19%. Keep it going, Cody. Well done. All right. So one last thing we'd like to take a look at is the advanced declines. As always, this should be something that you should check on a regular basis if you're ever wanting to purchase a stock or open up a bearish trade in the market. The advanced declines is something you need to keep your eye on. So whenever we're looking at the advanced declines, we typically want to favor a 2-to-1 bias. So if the market's moving lower like it is now, we want to see twice as many stocks declining than advancing. And as you can see, we are clearly meeting that criteria currently as of right now. So therefore, if we're going to be opening up a bearish position, this could be a good day to be doing that. All right. So with that in mind, let's go ahead and take a look at the WOW watch list. So once again, the WOW watchlist is something that we've had here at VectorVest for almost 18 years now, 19 years almost. Ever since 2003 was when it first was created, and its whole purpose is to find stocks that are talked about on a regular basis from all major different publications. That could be, websites, major analyst opinions, different newsletters that get sent out, popular newsletters, a lot of different sources that, if you're having to do that on your own, it would, 1, cost you a lot of money, and 2, take you a lot of time to get through all of that there. So it's better just to have VectorVest instead of having to, have all these different sources, because we'll just put them for you all in one spot to make it easier. So this will also, just want to point it out before we take a look at these, this will require the premium version of the mobile app or the desktop app. So if you have the desktop, then you have access to this, or if you're on just the mobile, you want to make sure you are on the premium version of that to gain access to the premium watch list. So as you can see at the very bottom, buried away a little bit, we have the WOW watch list winners. If you tap on the little eye, it gives you a little description. The Watchlist-Of-Watchlist combines the most popular pro picks with the power of VectorVest rank and analysis. So one other thing I will say about this list here that we're going to be looking at it's not only looking for the most popular or most talked about stocks throughout all major publications, financial publications, but it's also putting a little bit of a twist in it by looking for the ones that have the lowest price with the highest VST. So it's looking for those lower dollar stocks. So if you're looking for more affordable options, if you're not really comfortable paying, a couple $1,000s a share for some of the tech stocks, or a few $100s a share for some of the other tech stocks as of late, then this could definitely be a more attractive option for you. So looking at it right away, the very top stock that we see, Cross Country Health, right now it's basically flat for the day. Granted, keep in mind, right now the markets are in the red. We're not advocating buying any stocks at this time, but when we do get that green light to tell us it's okay to start buying stocks again, this is a really great place to go to find those candidates that can help your portfolio grow. So let's take a look. CCRN, doing the analysis first and foremost, taking it that next step. If you're ready to buy, you want to make sure you analyze the stock to make sure it meets your personal criteria. So we start off with these 4 indicators at the bottom, and as always, they're cast on a scale of 0 to 2. So above 1 is good and below 1 is bad. The first one we look at is the RV, or relative value, which is looking at the long-term potential over the next 1 to 3 years. So with CCRN, as we can see, it has good long-term potential over the next 1 to 3 years. The next indicator is that risk factor. How much risk is involved with the stock compared to the average stock out there. The RS currently is above 1, telling us there's less risk associated with this stock, but just slightly above 1. So it's not the best of the best in terms of safety, but it does have better safety than the average stock out there. The next indicator is looking at that momentum indicator, the RT, or relative timing, that short-term price trend indicator. So as we can see at 1.72, it tells us this stock is in a really strong short-term uptrend currently. So therefore, the combination of these 3 gives us our overall VST score of 1.5, making this stock favorable on both a fundamental and a technical basis here. So we like what we see. We scroll down a little bit more. We also see the stock is undervalued. So right now, at this current price level, you are getting a bargain for it. If the markets were moving higher right now, and we had the green light to go ahead and buy stocks, this could definitely be one of interest for a lot of people out there. Taking a look at the graph real fast, right now we have it on a 6-month look back. We can see a nice strong uptrend starting really since about the end of May, beginning of June, giving us this nice run from about 18 to 24. So what is that? Almost a 30% gain so far ever since we had that technical breakout there. And then now it's pulling back a little bit after the big run, but it could be consolidating. So once again, right now is not the time to be buying it anyways. Therefore, one to keep on your radar, getting pulled back with the market. When we see that green light, we can see this stock definitely starting to take off. Going to the next one. Oh, there we go. ARLP, so Alliance Resources. This is one, been on a nice steady uptrend over the last 6 months. Then from a technical basis, I had a pullback just most recently, started coming back, started recovering, and then you saw this breakout right around 19. And then since then, it's been steadily moving higher. So a new entry opportunity for this one. Now, once again, right now is not the time necessarily to be looking for a lot of riskier investments. So you may be looking to find stocks that, have solid fundamentals to back that up. That way, in this market, you're reducing your speculation, you're reducing your risk, and focusing on fundamentally sound companies. I think we're seeing a lot of shift into that sort of area in the market currently. So let's go ahead and change that MACD on the lower indicator to the earnings per share, because as we talk about time and time again, earnings is the engine that drives stock prices higher over time, and therefore if a company is growing its earnings, the company's stock price should continue to move up over that time frame as well. Alberto's asking, is there any advantage in using this list, more momentum? So Alberto, one of the things with this list, it's a combination of all the most popular newsletters, all the stocks that the most popular newsletters and analysts are talking about. So yeah, there's a big benefit to using this because you're getting into a stock that has a lot of publicity currently. So from a momentum standpoint, you could definitely see that. Plus, from a liquidity standpoint, you're going to see more actively trading. So that way you can get in and out, get better fills, all of that there. So yeah, this is, and besides that, it also helps reduce the amount of time it takes to find these kind of stocks, because you're not having to go scan a whole bunch of different newsletters, websites, all of that on your own, spending hours of time doing that. You could just simply pull up the wild watch list and find all those stocks that are talked about the most. And this is updated, I believe, on a weekly basis, if I'm not mistaken, as well. So, this is a current list that gets updated weekly. So, yeah, there's definitely a lot of benefit to using something like this over some of the other watch lists that we've looked at. So yeah, looking at ARLP, look at that earnings. Nice steady rise from bottom left to upper right, like a stair-step pattern, and that's exactly what you want to see. Now, that tells us the company is not only growing or making money, but when you look at the VectorVest earnings per share, it's a little bit different than anything else you're going to find out there, because it's also taking into account a survey that goes out, I believe, twice a year, if I'm not mistaken, that takes all the major analysts and their expectations for these stocks for 12 months out. So a forecasted 12 months earnings per share number. And then we blend that together to give you a better representation on what's going on. Abdullah becoming a new subscriber to the VectorVest Nation. So VV Nation, show them some love. Welcome. Glad to have you here today. So when you look at the earnings per share number, though, that's telling us not only is that company making money and growing their money, it's telling us as well that they're expected to continue to grow their money at least 12 months down the road as well. And that's what you want to see. Not only what are the numbers right now, but what are the forecasts or expectations for 12 months from now as well. So kind of goes with that old saying, money goes where money grows. All right, so ARLP definitely looking like a solid candidate. Once we get that good buying opportunity, DQ is one we've been talking about for a while. Gets brought up here when we analyze your stocks towards the end of the session. Gets brought up quite frequently. Now, this is one that the earnings per share were steadily declining, but now all of a sudden you're seeing that the earnings are starting to turn back around. Obviously, DQ coming from the clean energy field, that's been a really hot ticket item as of late. So therefore, could definitely see some potential with this if clean energy continues to run here. VRTX, Vertex Pharmaceuticals. We just talked about it at just a few moments ago, actually. Biotech in general has looked pretty strong and looked like it's ready to run here after the big sell-off we've seen the first half of the year. So VRTX is a popular one. Earnings are steadily rising. Price seems to be consolidating a little bit, pulling back with the overall market here today. But on a longer term basis, your 9-day simple moving average, this is a viewer requested moving averages here. The 9-day moving average is still greater than the 20-day moving average. You have a rising earnings per share, higher lows, higher highs. So yeah, definitely want to keep on our radar here as well. Murphy's. Now, this is an interesting one. A lot of people have been watching the petroleum moves, the gas prices and all that. And petroleum has been a really strong area to make money this year, but it's also had a pretty substantial sell-off from those highs over the last month or so. However, Murphy's, being a gas company, has somehow been able to withstand that bearish pressure we've seen with the vast majority of petroleum stocks. It's really managed to move sideways and now actually started to pick back up, hitting a new high just a couple days ago. You look at those earnings, you can see why. They're making money and they're expected to continue to make money at least a year from now. So therefore, yeah, the price has been able to withstand what's going on, that bearish pressure from the moves in oil, and actually going against that overall trend. One of the very few oil stocks out there that is being able to do this and being able to say this as of right now. Berto saying MUSA is a great long-term play. I agree. And especially with earnings like that, over 1 year, nice steady rise from bottom left to upper right. Folks, this company is making money and they're expected to continue to make money. So yeah, there you go. I think Martin is saying, welcome to the best. Yeah, these are going to be some of the best stocks out there at any given time. When you pair that with our market timing to make sure you're getting in at the right time on the overall market, that can greatly improve your success in the market and with your own portfolio. All right, let's go take a look at the next. EXEL, this one a little bit choppier, but you're still having a nice steady rise in earnings. Price has had some pretty significant drops, but also some pretty significant pops, getting right back to those levels Overall, relatively flat here though on a 1-year basis. On a 6-month basis, almost looks like it's forming, what is that, a flag pennant, I believe it is, or bull flag pennant, where you had the pull coming in here, seeing a nice run from a technical standpoint, and then consolidating right now. So if we can see this start to break out, that could be a nice breakout out of a bull flag there. So, for all you technical traders, maybe one to keep on your radar here. And now, once again, the great thing about this, we can go back and analyze the stocks as well and do it quickly and easily. So for EXEL, we saw that pattern, the technical pattern. Maybe we're putting it on our radar, but before we do that, we want to check with the analysis of it. This stock has great long-term potential. It has less risk associated with it. It's in a short-term uptrend, so overall the stock is definitely favorable. If we scroll down, stock is a little bit overvalued, but their earnings growth rate, their forecasted earnings growth rate is 31% a year over the next 1 to 3 years. Definitely a strong sign. Looking at their earnings yield, 4.5%, not bad. So you definitely have a lot of positive signs out of this here. And with that setup on the chart, could be a very interesting one to keep on your radar. And that's a great thing. Once again, with this list, you can go through. You see Merck is in here, Otto is in here, Lilly is in here, a lot of popular names. So once again, this list is not going to be just, those random stocks that have a small following that, most people may not be familiar with. This is going to be some of the most popular, most talked about or written about stocks out there in the market. So that way, you're getting a good basket to begin with. And once again, we're adding, for anybody who's tuning in a little later, we're adding in that extra power of the VectorVest rank analysis, because it's not just taking that whole list and putting it into a certain, or putting it just by VST. It's looking at the stocks with the lowest price, but with the highest VST. So it's almost like a bottom fishing search, but, a bargain hunting search, or a bargain hunting portfolio or watch list, if you will. So take advantage of this, folks. This is definitely something that, is very, very valuable to a lot of people, but you got to know that it's there to be able to get the value out of it. So that's why we wanted to highlight it here today, because it's something I actually don't think we've ever talked about in any of our coaching sessions. So, over the course of a few years, surprised we haven't really actually brought this one up, but definitely a hidden gem inside the VectorVest Stock Advisory that we wanted to bring to your attention. Now, I will say this. This is based off of a VV search, or a VectorVest 7 search. If you want to see the unedited list, that will be in the watch list section under the viewers. So if you're on desktop and you want to see the unedited list without having that filter of the lowest price with the highest VST, go into the viewers, go to the watch list viewer, and under special watch list, you can find the unedited WOW watch list overall. So you can play around with it there, do your rank analysis on that if you want to as well. But this one, for the vast majority of people, especially if you're trading and busy and on mobile devices when you're doing your trading, this is going to be a huge benefit to your own portfolios. What's your favorite watch list for people wanting to swing trade? So Dave, this could be a great watch list to use for if you're looking for swing trade opportunities. Some of the other ones that we've talked about in the past, top VST stocks, Midas Touch stocks, or even, looking at ETFs. ETFs is another good one that I know a lot of people are interested in. A lot of people trade ETFs just for the simplicity aspect. So yeah, it depends on your own personal preference. But Midas Touch stocks, VST stocks are great places to find swing trade candidates, as well, once again, as the WOW watch list stocks here at the very bottom. Trying to think, but that's a great thing. You go to the stock pick ideas. If you want to keep it simple, just look at the hot stocks, or as we've talked about, if you're looking for more industry rotation or looking for the hottest stocks in the hottest industries, use the hot stocks or the hot industries here. For example, ETF, let's get out of the ETFs. Let's go food candy, for example, here. And then Hershey's, pulling it up. Good long-term potential, less risk involved with this stock. It is in a slight uptrend. I bet it would be a stronger uptrend if the market starts improving. Overall, definitely a favorable stock still, though. But, going with industry rotation and finding the hottest industry and the hottest stock in that industry can be quick and easy with that as well. So once again, it really depends on your personal preference, but those should be a few options that I prefer. But obviously take this knowledge and then really mold it around your personal goals there. All right, so with that, if you guys don't have any other questions about the WoW watch list, let's go ahead and start to analyze your stocks. So if you have stocks you want to see analyzed, make sure start putting them into the chat, and I will start getting those analyzed. And while you're doing that, if you haven't already hit that like button, go ahead, hit that like button. Once again, it doesn't cost you anything and helps continue to grow this community and helps us with the YouTube algorithms. So if you haven't done that already, make sure to do that now. My problem is getting out of a trade at the right time. Dave, I I get that. I honestly can relate to that. That was probably my biggest issue when I first, started trading by myself. As I would have this big gain and then I wouldn't take that profit when I need to. That is something that comes with discipline, honestly. My best advice is, if you're having troubles following, first and foremost, set yourself a plan. Set yourself, whether it be, certain money management criteria or a technical plan. Set yourself a plan of when you're going to take your profits. Put your total gain or your total return that you want to see as your point to take that profit off the table. Put your max loss in there, so that way if your stock hits that max loss, you just cut it and remove it and get rid of it. You can always get back into it later, but at least you're not going to be riding it down even further. And then the other rule of thumb, or another good rule of thumb, is what we call the 50% rule, which is simply stating that anything over a 10% gain in a stock, never give back more than 50% of that profit. Obviously, you can do less than that, but no more than that. That 50% rule is probably one of the biggest benefits to me personally, to help me, stay disciplined and lock in my gains rather than trying to let it ride. Especially with the current, mentality that you see out there on all the different social media platforms. That's probably not a very popular one, is to lock your profit in on the 50% rule, but it's something that has helped my portfolio grow substantially. So hopefully that can help you out. But we've also done a lot of streams on money management. So you can go back and take a look at those where we talked about specific rules to help you develop those. That could definitely be a benefit as well. The last thing I'll say on this, is, if you're having issues following a certain plan or following your criteria because you're not setting up your stop losses with your broker, the best thing I could recommend is get a notebook, write down your trades every single day. You put in your stock, you put the price in you bought it at, and let's say you're using a 10% loss and a 50% gain. So you put that price, 50% gain from your initial purchase price as your target. Your 10% loss from your initial purchase price, you put that price down as your max loss, and then you follow that. That way you have it written down and it helps you stay more disciplined and remove that emotional aspect. But that should help you with managing a stop. If you're using a percent gain loss, that's all based upon your initial purchase price. Or if you're using a trailing stop, then that's based upon, the highest price it attains and pulling back from that highest price. So that's how you would manage it, is if you're using a percent gain loss, base it off of your initial purchase price, because that's the price that counts to you. All right. So with that, let's go ahead, start jumping in and taking a look at your guys' stocks here today. So as always, we'll just click on the magnifying glass in the upper right. And Ben's caught the first one with ZIM. We'll go ahead, pull that up. ZIM, great long-term potential, but it does have a lot of risk associated with this stock. It's in a really strong decline. So overall, the stock is favorable because of the long-term potential. But RT tells us right now is not the time to be long in this stock. If anything, it's a time to stay away from this stock. I know Glenn was liking this stock yesterday, but it's one I've been really skeptical on. It had a big run mainly because everybody wanted that 1950 dividend before all the taxes that they didn't realize came out with that. They've got that dividend. Now there's not a whole lot. There's not that hanging fruit that everybody's shooting for. So what's going to be the big catalyst that drives this higher? I don't know, but until somebody has a good answer for that, I'd be skeptical for right now. Wait for it to continue to sell off and then try to figure out an opportunity then. All right. LI. Let's go see. I see a few people asking for LI. So LI, poor long-term potential, a lot of risk associated with it. However, you are in a really strong short-term uptrend. So this is a speculative stock with a lot of momentum behind it right now. So therefore, if you're not or an aggressive swing trader, an aggressive day trader, if you're not a momentum trader, this is a stock you simply pass on for right now. If you are a momentum trader, then keep an eye on the charts, follow your charts. You most likely have your favorite setup already in place. Follow that and let that be your guide. Because you've seen a huge run. It's almost doubled really in the last month and a half. Pulling back a little bit right now, could see some profit taking going on after that doubling. So once again though, speculative traders, have fun with it. If you're looking at fundamentals whatsoever, this is going to be one you're going to stay away from for the time being. All right, let's see what else we got here today. Did Zim, Tesla, TSLA. Tesla. Good long-term potential, less risk associated with it. However, the timing is off. Right now, it's been in a steady decline. So therefore, not the time to be long in it. Good stock overall. Need to see that timing pick back up. Speaking of Tesla, anybody hear about those new ETFs they're coming out with that are double and triple leverage, if I'm not mistaken, and single leverage on specific stocks? So instead of buying or shorting the stock, you can buy a double leverage contra ETF, specifically looking at Tesla. I think it was TSLQ. I don't know if they're in the VectorVest system today yet or not. They probably will be in tomorrow, later today when we update the database every Thursday. So TSLQ is not in here, but I believe that's a symbol of one of the leverage contra ETFs. It's a double leverage contra ETF against Tesla. So interesting how that's going to work out being on a specific stock nowadays. And surprised honestly to see that get passed, but hey, it is what it is. Take advantage of the tools we have, right? Chris wants to take a look at MRO. Hopefully you're doing well, Chris. MRO, good long-term potential, a little less risk than the average stock out there, but once again, the thing with most oil companies, timing. It had a huge, substantial run over the course of the last year, really picked up since the beginning of this year. And I've talked about it a little bit in other places, but you know, the huge, substantial run to the upside is going to see a equivalent move to the downside before it finally finds a base and starts to level out and find some attractive price points. What I mean by that is, you know, it looks like a nasty sell-off right now. And if you bought towards those highs, then yeah, it has been a nasty sell-off. If you were late to the party, you're definitely getting punished. But if you've been in this trade since we've been talking about it, you know, we've been talking about oil as a long-term buy really since 2020, end of 2020-ish area. And so since that point, you would still be up nicely if you were following that guidance. This little pullback, yes, it would be painful, but it wouldn't be that painful because you'd still be up well over 100% following that there. So keep that in mind. You know, it's had a big run, but put it in perspective. When you look at a 5-year, it's, you know, a slight pullback and a longer term overall uptrend. Momentum. That's really been the theme of this year. Pump and dumps all across all of commodities, if you will. ZSL, let's go take a look. Oh, ZSL. You know, things are definitely, when they say things are getting volatile, that's what they're meaning. You're seeing huge run-ups and then huge crashes all across different asset classes there. ZSL, since it's an ETF, your primary focus is going to be RT. RT has a value of 1.95, telling us it's in a really strong short-term uptrend. So overall, this ETF is favorable right now. We'll take a look at that in a second there, Louis. All right, IMXI, good long-term potential, but definitely has a little bit more risk associated with it. You're in a slight uptrend. Overall, the stock's stock's about average, slightly better than average. Hey, Sharon, love hearing that. Well done. Well done on that trade. FFIE. FFIE. It's definitely a speculative trade. Poor long-term potential, a lot of risk, but you do have momentum in favor of it right now. So therefore, you speculative momentum traders, take advantage of it. But if you're, take into account fundamentals whatsoever, this is definitely going to be one you're probably going to stay away from. Overall, it's favorable because of the strong momentum. But, once again, what goes up that fast can also come down that fast. Let's see, CELH. CELH, good long-term potential, less risk associated with it, still really strong short-term uptrend. Overall, stock is definitely favorable. I like this stock. It's down a little bit right now, pulling back off of those highs, but earnings are steadily rising. Had that dip, now need to see it break that 80 and continue that uptrend. But let's go zoom in. Let's say 6 months. 6 months, nice steady uptrend on a 6-month basis. I like the stock, but once again, I need to see the timing of the overall market tell me it's okay to start getting back into some positions here. MMAT. MMAT. Good long-term potential, but does have more risk associated with it. You are in a really sharp decline. Overall, the stock is not favorable here. Let's see. CRSP. CRSP. Poor long-term potential, a lot of risk associated with it. It's a biotech stock. Of course, we're going to see that here. But the timing at 1.84, really strong short-term uptrend. So overall, stock is favorable. Once again, momentum traders delight. If you're not a momentum trader, this is probably going to be one you probably stay away from for the time being. All right, Roblox, RBLX. Roblox, poor long-term potential, a lot of risk associated with it, but the stock does have some strong momentum, enough to make the stock average at best. Therefore, if you're a momentum trader, have fun with it, but if you're not, probably going to wait for a better opportunity here. Where was it? TT, let's go take a look. So Train Tech, good long-term potential, about average risk associated with it. However, the stock has been in a steady decline. Therefore, stock is slightly less than average. And with the RT being below that level of 1, right now is not the time to be holding it in our portfolio. Simply save that cash, let it stay, keep that powder dry, if you will, and then wait for that better opportunity to buy it whenever it starts reversing and starts moving higher. Let's see, DVAX. DVAX, good long-term potential, but does have a little bit more risk associated with it. You're in a really strong short-term uptrend. Overall, the stock is still favorable here. SYM. There we go. SYM, poor long-term potential, a lot of risk associated with it. However, you do have some strong momentum with this stock. Overall, the stock is favorable. Let's go take a look at the graph. This stock really wasn't doing anything for the vast majority of the last 6 months. Really didn't start trading until the very beginning of June. And then from that point, you've now seen it have a pretty wild ride. This is what we're talking about with speculative stocks, folks. This is when you see those RV and RS scores below that level of 1. These are the kind of styles of stocks you're going to be looking at. Really wild swings, higher and lower. Once again, these big spikes that you see here, great for day traders, but if you're not a day trader, this is going to probably be one you stay away from. CHPT. Also, if you guys are enjoying these sessions, make sure smash that like button, subscribe to the channel if you're not already subscribed, turn on the notifications so that way you get updated on all the live content we have coming out for you every single day. And all that helps us out with the YouTube algorithm. So if you guys haven't done that already, let's see if we can get a few more likes here today before we finish. All right, CHPT, poor long-term potential. You have a little bit more risk associated with it, so that tells us this stock is still a speculative stock. Timing at 0.77 tells us it's also in a steady decline, so therefore the stock is not favorable. Could have its day one day, but right now is not its day. ALDX. ALDX, poor long-term potential, a lot of risk associated with it. However, you do have strong momentum behind it right now, so overall the stock is favorable, but it is a speculative momentum trade. I'm getting a lot of these here today. I'm kind of noticing a trend here with some of the followers on what kind of stocks you guys are looking for. One of the things, it's interesting, we were looking for more swing trade candidates. You guys are looking at day trade candidates here today. And I don't blame you, especially with what's going on in the markets. Current conditions are ripe for day traders. You know, I don't think anybody's feeling too comfortable holding a position overnight in these current conditions. UGI, let's go take a look. UGI, good long-term potential, but does have a little bit more risk associated with it. So more of an aggressive stock here, Jody. Looking at the uptrend, it is in a slight uptrend. Preferably, I like to see it at 1.1 or higher. At 1.08, it's basically treading water. It's getting close, but we need to see it break that 1.1 threshold. Overall, the stock's slightly favorable here. Sorik coming in as a new subscriber. Welcome to the VV Nation. AIG, let's go take a look. AIG, good long-term potential, but does have more risk associated with it. You're in a steady decline. Overall, stock's about average at best. With the timing of 0.69 tells us it's not the right time to be holding on to it. The jokes I want to make, I'm going to pass on that for today. APRN, let's go take a look. APRN, poor long-term potential. It does have a lot of risk associated with it. However, you do have a slight uptrend on a short-term momentum basis. Unfortunately, not enough to offset the amount of risk involved with the stock, so therefore the stock is not favorable currently. SYM ready to pop. We'll see. I mean, but once again, that's a speculative claim there. BPT. Oh, BPT. Oh, there we go. BPT. Poor long-term potential. Average risk involved in this stock. It's in a short-term decline. So overall, stock is not favorable here. Yes, it's had a pretty big run, but it's now also having a pretty significant decline. But it is, you know, more of that aggressive speculative trade there. So you got to be careful with those. What goes up that fast can also come down that fast. All right, so let me make sure. Did I miss anything else? Let me go through the list here. Luckin Coffee, LKNCY. Oh. There we go. So it's going to be a speculative trade. As simple as that. Poor long-term potential. A lot of risk involved with this. You do have short-term momentum to the upside, so trade it if you're a momentum trader. But if you're not, stay away from it. VST. Vista Energy. Vista Energy, good long-term potential, but does have more risk associated with it. You are in a steady decline on a short-term basis, telling us right now we don't need to be holding it. Overall, stock's about average, slightly better than average, but right now not the time to be holding it long in your portfolios. DQ. DQ, good long-term potential, less risk associated with it. Timing is in a slight uptrend, but once again, I prefer to see 1.1 or higher. At 1.09, slightly below my cutoff point personally, but it is in a slight uptrend. So overall, the stock is still favorable here. ARLP, looked at that a little bit ago, but we'll take a look at it. ARLP, good long-term potential, less risk associated with it. You're in a nice, strong short-term uptrend. So overall, the stock is definitely favorable. Taking a look, it's also undervalued, so you're getting a bargain for it. It has a forecasted earnings growth rate of 36% a year over the next 1 to 3 years. Looking pretty strong on that one here. I think, did I get all of them yet? I think I got all of them. Let me make sure I didn't miss any more. I think I got all of them. So there we go. Successful there. All right, so with that, let's go ahead, take a look at the homepage here, see what the markets are now showing us. The Dow is actually all the major indices have been improving. The Dow is now only down 1.4%. It was down over 2% earlier this morning. All the major indices were actually down over 2% this morning. So the Dow has definitely been improving, now only down 1.3%. NASDAQ's down just a little bit more than a percentage point here. S&P down about 1.25%. Overall, VectorVest Composite down 1.6. Still have 2 red lights showing up in the color guard. Therefore, the market still is somewhat bearish, and we don't advocate buying any stocks at this time. No surprise, as always, we're not going to see that 3 red lights potentially here today, because when we look at the price compared to 5 trading days earlier, we had a green light 5 days earlier. So therefore, the best we're going to see right now is a yellow light. So keep that in mind. Going down to the advanced declines, advances have picked up a little bit, but that's starting from an extremely low point. So, not too hard to improve from that point. But the decliners have pulled back slightly, about a percentage point since we first started our session. So you're seeing a slight increase, but not by much, to say the least. So with that, that's going to do it for me today. If you want to see more of us, as always, we do have Glenn Tompkins coming up with Trending Thursday at 2 p.m. Eastern today. So make sure to go head over there or come back to the channel around 2 o'clock and hang out with Glenn to find what news is making the headlines that could have an impact on our trading, what's hot, what's not, and what headlines are really driving this market. So if you want to get all that up-to-date information on, all the major news and your one simple to find location, come hang out with Glenn once again for Trending Thursdays at 2 p.m. So with that, have a great rest of your weekend, or have a great rest of your week. Have a great weekend, and make sure to be here at 11 a.m. Eastern next Thursday as we kick off our next mobile coaching stream. So until then, take care, adios, and toodles.